You can legally leave the Italian tax system and move to Dubai. But if you get the exit wrong, Italy can still tax you for years to come. In this video, I'll show you exactly how to cut ties the right way and avoid expensive mistakes when leaving the Italian tax system. I've seen people try to leave Italy without following the proper steps, and they end up with surprise tax bills months or even years after relocating to Dubai. I'll show you how to exit the Italian system clearly and start your life in Dubai with zero tax complications. Before we start, my name is Shiraz Bahid, and I've helped hundreds of business owners and families move to Dubai, set up their business, immigration, and banking, and help legally reduce their taxes. So if you want my help in doing the same, you can book a strategy call at setuphero.com/call. The first thing to understand is that Italy, like many other high-tax countries, taxes its residents on worldwide income. If you stay tied to the Italian tax system, even income earned in Dubai could be taxed back home. If you are serious about relocating to Dubai, you need to have a clear exit. To exit the Italian tax system, you must cancel your residency with local municipality. This is the legal process that declares that you are no longer living in Italy. But don't worry, you don't need to give up your Italian citizenship. Once this is done, your name will be moved to AIRE. This is the registry for Italians living abroad. That shift is important. Without being listed in this, the government might still treat you as a resident for tax purposes. After that, make sure that you spend less than 183 days in Italy each year. Even if you're registered abroad, spending too much time in Italy could trigger tax residency again. The government looks at where you physically live, not just what's on the paper. Now let's talk about how Dubai tax residency works. In Dubai, there is no personal income tax, there's no capital gains tax, and there's no inheritance tax. If you set up your life properly, your income and assets can grow without being drained by the state. Corporate tax is now 9% in Dubai, but only on profits above 100,000 euros. Below that, the corporate tax is 0%. For many business owners and entrepreneurs, this threshold creates an opportunity to operate tax-free. If you're coming from Italy, where personal tax can easily hit 45%, this shift can be life-changing. But it only works if you truly leave the Italian tax system behind. That means no house in Italy, no habitual presence, and no dependent family members staying behind in Italy. The next part is setting up your legal presence in Dubai. The easiest way is through a free zone company. This gives you 100% ownership, a trade license, and a 2-year residence visa. Most people choose a free zone because it's fast and doesn't require a local sponsor. You can run your business from home or use a co-working space, depending on the free zone rules. Some free zones are more flexible than others, so it's important to choose the right one for your business model. Once your company is registered, you get a residence visa that allows you to live in Dubai. With that visa, you can open bank accounts, rent a home, and sponsor family members. You'll also get a resident ID card called Emirates ID, which is what you need to prove your new tax home. Dubai does not issue tax residency certificates automatically. To apply for it, you must show at least 90 days of physical presence in the country and have a valid lease or proof of address. This certificate is what proves to Italy and other countries that your new tax residency is in Dubai. Another point that many people miss is the exit tax. If you leave Italy and you own significant assets, you might trigger capital gains tax when moving your tax residency. This is especially true if you hold shares in a company or large investment portfolios. You should speak with a local tax advisor in Italy before exiting to plan this around. Sometimes restructuring your assets before you move can save you thousands of euros. Now let's talk about compliance. In Italy, you must file an annual tax return even if you live abroad, unless you exit the system correctly. Dubai has no annual tax filings on a personal level, and for your free zone company, you do have to submit audited accounts and report profits for corporate tax if applicable. Unlike the Italian tax system, which is known for its complexity and bureaucracy, Dubai is streamlined. Most of the tasks are online and digital, they're fast and transparent. You don't get buried in paperwork. If you're wondering how long the whole move takes, the answer depends on how prepared you are. Exiting Italy can be done in a few weeks, and getting your Dubai setup the right way might take a month or two. It involves choosing the right free zone, getting the license issued, processing the visa, and settling into a home. But once it's done, you have a foundation for global freedom. One final warning that if you leave Italy but still have family or financial ties back home, the authority may challenge your non-tax residency status. That's why it's important to make a real clean break. That includes closing the utility bills, deregistering from the health system, and clearly showing Dubai as your center of life. If you want my help in setting up your Dubai company, residency, and banking, and exiting the Italian tax system, you can book a strategy call with me at setuphero.com/call. We'll go through your situation and build a clear action plan that works for you. And if you're serious about using Dubai for your business and investments, you should really check out my next video right here.